If you've ever watched a stock go soaring and thought to yourself, man, I wish I really caught that move, then this is your video. Swing trading is one of the fastest ways to grow your trading portfolio without sitting on your computer all day, every day. But most beginner traders get all of this completely wrong. In this video, I'm going to show you how you can spot high probability setups that are going to put you in a great position to make money for a very long period of time, even if you're a brand new viewer. This is going to be a step-by-step plan to start swing trading and get the ball rolling. Now, to kick things off, what exactly is a swing trade? Well, to me, a swing trade is something that you're swinging in a very short period of time. And by short period, I mean somewhere between 1 and 5 days. Is it going to go sometimes 10 days? Yes, it will. But in general, you're probably going to be in stocks no more than 1 to 5 days. That differs from a long-term trade, which can be 2 weeks to a year to 2 years, however long the trend goes, or a day trade where you're trading something in a 30-minute window. This gives you the option to look at something, let it go over several days, gain momentum, and it is a great place to start if you want a little less activity than day trading, but a little more activity than long-term trading. Now, with that, you might be asking, well, how long do I actually need to sit at my computer to watch these? Because I've seen other people on YouTube that sit there all day, every day. They start at 6 o'clock in the morning and they go to 6 p.m. because they're just watching aftermarket trades, pre-market trades, middle of the day trades. This is about no more than an hour a day. If you're doing this, if you're swing trading for more than an hour a day, I think you're a little too far into the weeds. To me, if I'm looking at swing trades, I'm checking them periodically throughout the day, maybe spending 10 minutes here, 10 minutes there, and it sums up to about 1 hour per day. Why? Because there's not a ton of movement. There are going to be days that you get a significant amount of movement, but it's not like you need to stay on there and say, okay, if this goes up 5 cents, I need to be sure to exit this trade or enter this trade. That's not generally how it works here with swing trading. So it gives you a little more of that relaxed feel, but it still keeps you active daily more than 5 to 10 minutes. Another great question that I'm often asked is, how much money do I need to start if I want to swing trade? And the answer is you could do this with $50. Now, the beauty behind swing trading is that you will not be marked as a pattern day trader. Pattern day trader, let me explain real quick, is somebody that gets in and out of stocks consistently every day, multiple times a day, because they're looking to grab these small windows of profits throughout the day. And you're going to be marked as a pattern day trader. And for being a pattern day trader on brokerage platforms in the United States, you need to have a $25,000 minimum. That's just the rule of what it is. Now with swing trading, you're not getting in and out every day. You're getting in maybe on a Monday and out the following Monday, or out that Wednesday or Thursday, whatever it is. It's not this quick in and out, this quick jumping back and forth. So the beauty of that is that you don't have to have $25,000 to start. You can really start with to buy one share of a company. There's shares out there that are $5 or less in many cases, and you can go and trade those. And that's the beauty of this. Now, aside from the money standpoint, it's a great idea to start trading before you have a ton of money. Why? This is a lifelong process that I'm teaching here. This is not something where you're going to go in and you're going to 100x your money in a month. That's not what I'm saying at all. What I'm saying is you are going to go in, let's say you're 25 years old, and this is something that you're going to learn. You're going to become expert level probably over the next 2 years. So 27 years old, you're in the workforce, you're starting to make some money in this example. And at some point, you're going to have $50,000. You're going to have $100,000. You're going to have $1 million at some point in your life if you do things the right way. Would you rather learn to start swing trading when you have $100,000, or would you rather learn now and start now and build the foundation? Well, you'd rather do that, of course, so you can hit the ground running when you start having money in your pocket. Now, before we get over to the chart and start talking about what exactly you're looking for to execute a nice swing trade with trend, volume, and candlesticks, etc., let's talk about the emotions of this. This is kind of the trajectory of a trader, and this was my trajectory, and I've noticed after teaching so many people that this is kind of the trajectory that happens. Everybody comes into trading and they're very, very excited. Why? Because they see what's happening on television. They see their friends making money, and they're in and out of stocks very quickly. They maybe you started in 2021 when GameStop and AMC and Nokia and all these things were going crazy, and people were making 100% overnight. Well, that's great that happened. And that's great if you caught that run, but it is not sustainable over a long period of time. Emotionally, that's the problem. Day trading can be a very, very large grind. I did this years ago. Back many, many years ago, I was a day trader for 2 years, 2 solid years. So it was a daily grind. I would wake up at 6 in the morning. I would start looking at what stocks are moving, and it was great. It was very, very profitable, but it came at, I don't want to say a cost, but it was just emotionally draining. Why? Because you're getting into a stock and you have to sit there on your computer. You cannot leave. If you get into a day trade, and you leave, that is just incredibly, incredibly irresponsible. You cannot do that. You can set stops on the top and bottom if you want to, and limits to get out. That's fine. But if you just leave your market order there and let it roll, incredibly irresponsible. You're going to do very, 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 very poorly over your trading career. You're going to realize it doesn't work, and you're going to say, day trading doesn't work. I'm going to move on. Well, you were being a complete bonehead doing it. That's why it doesn't work. So when you look at this from an emotional perspective, here's the trajectory of a trader. They come in, they're very excited. They start day trading and they realize, damn, this is a grind. This is really, really hard. And then they go and they start swing trading and they say, oh, this is not bad. It's way better than day trading. I only have to spend an hour max a day. And then they say, even this is too much. I'm going to go over to long-term trading and I'm going to just check my chart once a day and go from there. This, to me, is the trajectory of the trader. But swing trading is a great place to be. Personally, what I do, now I do a hybrid of long-term trading and swing trading. I don't day trade often. If there's an amazing opportunity out there, I will still execute on it. But sitting at the computer for me is very, very challenging. I just don't like doing it anymore. And swing trading, it's so easy to pull up TradingView on your phone and do it on the go. You can do that with day trading. You absolutely can, but it's a little bit different. You have to be swapping apps back and forth, executing trades. Swing trading is a great, great place to be for the person that doesn't want to be super, super emotionally wound and wants to just kind of relax and execute trades at a slower pace. Now, let's finally get over to the chart. What are you looking at? I've talked about the emotions of it. I've talked about what it is. I've talked about the time frames. Now, how do you execute a trade? What are you looking for? Well, this is Live Nation here that I pulled up because I'm seeing that it's kind of getting to the point of being a swing trade where we can jump into something. So what is the first thing that happens when I start looking through my charts that my eyes go to? Well, it's the trend. I always want to look at down here at the trend and say, what is going on down here? Do I have anything worthwhile that I can even get into? So if I just, before we even start doing this, we're going to come back to Live Nation, but I type in Google. You can see it's going down, not really a lot going on there. Let's type in Jets. It's kind of wiggling around down here, not really anything going on, not coming up through the sweet spot, which I'll explain in a second. So let's go back to Live Nation, LYV. Live Nation, however, you can see, contrary to those other two, look, we're kind of moving in this positive direction like so. It's kind of moving into this sweet spot area. The sweet spot is where you have the highest probability to make money. Remember, trading is all about probability. You're giving yourself the highest probability to make money. Are you going to win every single trade? Absolutely not. But the idea is that you get winners that run for a long period of time and you cut your losers and you don't get bogged down by losses. That's the idea behind all of this. You have to accept that you are going to lose money when you're trading. Hopefully it's not a significant amount of money. And there are stops in place, there are emergency breaks in place that stop that. But you have to accept that not every trade is going to work out for you. If somebody is out there on YouTube, anywhere else, saying that you're going to make money every single trade, they are a complete fraud. It is impossible. The only person that can make money on every single trade is Bernie Madoff, and we all saw how that ended up. It's just not possible. So coming into the sweet spot, we say this area has the highest probability to make money. Our stochastic or our trend here on the bottom is 32%. On the high side, it's 80%. In this area right here, you're going to make money. That's where you're going to make your money. That's where you're going to make your bread and butter. So now we're looking at this. We're saying, okay, the red line is in the sweet spot. Yellow's just behind it. It's getting into the sweet spot. Okay, let's say that we're good there. We have something positive. Next, where's my eyes going to go? Volume. Volume is the gasoline to the car. It's if you're pushing a boulder up a hill, it's having the momentum behind you. if you're on an offensive line or defensive line in football, you all pushing in the same direction to get your running back through, to stop the offense, whatever. You need to all be in sync. When everybody's pushing in the same direction, good things are going to happen, right? That's the same thing with volume. If we're going long here, meaning that we want the stock price to go up, we need to have volume that is above average. And you can see here that we are above average. Average meaning this yellow horizontal line that I'm drawing blue over is your average volume traded of the stock over the last 30 days. You can change that to whatever number you want. I prefer 30 because it's a month. I want to see what's happening over the last month. And you can see here, we've had incredible volume over the last 30 days. This is actually looking like a really nice trade. Today we have pretty decent volume. I think we're going to get to average. Good things are happening, right? Okay. Check number 2. We have check number 1 down here with the trend. Check number 2 right here with the volume. Now, where do we go? Well, we look at a couple of different things. First, we look at, and by the way, when you join the community, you get the checklist. You get to see all of these things. You can print it out, put it right next to your computer, run down this list, do it every single time. It is going to help you. Now you come over and say, all right, we're looking at the candlestick. We're looking at what I call an engulfing candlestick. This is your buy signal. If you have many, many different types of candlesticks, we have videos on these types of candlesticks, but the most ideal candle is really what we're seeing here. It really is. Maybe I'd like a little bit more, but it's a candle that is higher than the previous day. So here's the previous day's high right there. It's higher than the previous day, and it's thick. It's thick, meaning that the price is just continuing to move up, and the price, there are not sellers coming in where it comes back down. If you look at a candle like this one right here, this little candle, so you started the day here, basically where it closed, you went down, you went up, and you came back and you closed right here in the middle, and that's why it has those wicks on both sides. For this one, we don't really have a lot of wicks. We have a wick on the top, pull back a little bit, but what I want to see is a little more follow through. I want to see more of that. I want to see more of that. That's your engulfing candlestick. It's engulfing the previous day. That's what you need for a signal. If you're looking at this candle right here, this is a big, thick candle engulfing the previous day. This one right here, not an engulfing candle. Is it higher than the previous high? Yeah, but it's really not. If it looked like that, if it was kind of really engulfing and taking out the previous day. This candle coming down now, this is taking out, it's hot, it's bigger, thicker, lower than the previous day. So the candles go both ways. You need to understand this is not an engulfing candle yet. If we get a bit more of a run, maybe to 143.50, maybe another 50 cents, that's going to be an engulfing candle that's taking out the previous day and making a run. So in that case, we would have a check mark here for our trend, a check mark here for our volume, a check mark here for our candle if it looks exactly like I drew it. Now, where do we go from here? Well, let's make sure that we're clear of moving averages. Are we clear of moving averages? Yeah. We're above this purple line here. That's the 25-day moving average. We're above it. We're separated from it. We're not touching it. These moving averages are like magnets. When stocks get above them, they want to pull right back to them. When they get below them, they want to be pulled right back to them. That's what these moving averages are. The 100-day moving average is your most powerful moving average. 200-day is your second most powerful, 50 is your third most powerful, and a 25 is your weakest of the four, but it's still powerful. You need to make sure that you separate from these moving averages, and that's what's happening today. That's why this is actually lining up to be a good swing trade. I'm looking at this going, man, maybe I should jump into this as a swing trade if I get this move to 143.50 or 144. We'll see what happens throughout the day. But then I go over and I look at what's called the bid-ask spread, or the bid and ask difference. So you have your bid and you have your ask. This is what the market maker wants for it. This is what the market wants to buy it for. And there's a separation in between. That was just 19. Let's see, now it's 22 cents. I like to see a 1 or 2 cent spread. This is what often happens. Somebody goes in and they will buy a stock, right? They'll go in there and buy this right now. And let's say they buy it for $143.15. And the second they buy it, what's that market maker going to do? Well, he's going to drop the bid price, or the ask price. He's going to drop it to, let's say 142, let's say 143. And what's going to happen to your price? Your stock price goes down. It's going to go to 143. You lose 15 cents just like that. And you're going to say, Every time I buy a stock, I lose money. Why does that happen? Because you're not looking at the manipulation that's happening by the market maker. This is all a game. This is a market. This is a market when you go in and you're just bidding and you're trying to, same thing as going to a market to buy fruit. You're haggling with somebody, whatever, right? You're haggling on a price. It's the same exact thing. There's a bid and there's an ask, and you got to negotiate. And that's what this is. And if your negotiation is out of whack and there's a 19-cent spread, you're the one that's going to be the sucker in the room. You're going to buy it up here, and what's going to happen? They're going to instantly drop the price down, and you're going to say, well, how come every time I buy, I lose money? It's because you don't look at the bid-ask spread. You need this number to be, see, 4 cents right now? I would go ahead and execute that trade. Why? Now it's 18. Why? And by the way, this is a bad example for, usually you're going to see a 1 or 2 cent spread and it's not going to change. There's something going on here. You can tell that there's been incredible volume over the last several days. This is not a good example for the bid-ask spread, but if you start going through, I encourage you to do this. Go and look at some other stocks right now. Actually, pause the video, go look at some other stocks and say, oh, 1 to 2 cent, 1 to 2 cent, 1 to 2 cent, then come back here and carry on. But you're going to see that it's usually 1 to 2 cents. Odd that there's manipulation going on, but this one is. So eventually you're going to see this come to 1 to 2 cents. And when it gets to that number, then you can execute the trade. Some stocks, $500, $600 stocks, if it's a 25-cent spread, that's a different story. It's all relative, right? That's why I said for Live Nation, 5 cents is probably okay. This is a $143 stock, $150 stock some days. It's okay to have a 5-6 cent spread. But if you have something like $20, $30, no, it needs to be a 1 to 2 cent spread to show that there's consensus that's happening between the market and the market maker. So you're probably wondering and watching all this, well, what kind of returns can you actually make here? We have had so many people, including myself, that have made swing trades of 20, 30%. That's not the normal. Don't get me, I don't want people to say, you said you make 20, 30% per trade. That's not what I'm saying. We have seen 20 to 30% per trade. When you get a runner, it's just going to run. You're probably going to be somewhere in the 8, 10, 12, somewhere percent range in there on average when you're swing trading. That's probably wrong. You're probably going to be somewhere between the 10 to 15% range when you're swing trading. And if you start incorporating other trades, you're of course going to have those that are coming in as well, and you're going to really boost those numbers. But you're going to have those outliers that'll get you 20, 30%. If we just come over here, there's a couple of trades in the past that I have made or that I've looked at that these things really, they give you a big run. I mean, here's Sky West. This thing gave us a run from $83 to $95 in a matter of no time, 6-7 days. Carnival Cruise. We have a guy in the community. His name's Steve Kronk. He trades this thing religiously up and down and up and down. And the beauty of swing trading is that you can short too. It's not only about going long. You have to be able to make money on the way down. Why? This is a great example right here. Well, you enter this trade right here, and you make the run from $20 to, let's call it $21.50. Nothing crazy, right? But look at the rundown. Look at this rundown that you could have caught. This was running from $20 to, look at this, $15. That's a hell of a trade. There's your 25% right there. There's your 25% trade right there. You need to be a two-way trader. It's just like I said, when you're playing basketball, you got to play offense and defense. When you're playing hockey, you got to play offense and defense. Any other sport like that where you're playing both sides of the ball, you have to be able to do both. That's exactly the same thing when you're trading. You have to be able to go short. You have to be able to go long. We have many, many, many videos on shorting. I encourage you to watch those specifically towards swing trading. But it's the same thing. You take the chart, you flip it upside down. It's the same exact thing. I'll show you right here. If you look at this, trend's going up through the sweet spot. What are you waiting for? Engulfing candlestick. You're waiting for, you have good volume coming in. You exit here at this top area where we start rolling over into the sweet spot in the other direction. Okay, there's your long-term trade. Short trade, what do? Coming down through the sweet spot, you're looking for your engulfing candlestick. Selling volume is pretty good down here. Where do you exit? Somewhere down here when you start to get that rollover down below the sweet spot. It's the exact same thing. You're just flipping the chart over. Anybody that says that shorting is a losing game, this and that. Yeah, they're probably talking about when you're investing. It's 100% a losing game. It's unlimited losses. But when you have stops in place or emergency breaks in place, you're going to do very well. You have to be able to trade on both sides of the ball. Now I'm going to give you a couple of ways to find stocks, right? Now you've seen how you actually do it, but where do you find stocks to trade, right? Well, one place that I really like to go is Yahoo Finance. So if you come over here to Yahoo Finance, you come to markets, and you can see we have most actives, gainers, losers, biggest gainers, the trending tickers. And if you go to most actives, this is stocks that have the most volume traded during the day. It's no secret of why they have a most actives on Yahoo Finance on every platform. It goes back to exactly what I said about volume. You want everybody pushing that boulder up the hill in the same direction. You want everybody marching in the same direction. It's no secret that they have a most active. So this is looking at stocks that have the most volume traded on the day. Lucid, about 102 million shares traded today. Applied Digital, about the same. NVIDIA, 73 million. And it shows you the average volume right next to it, what it is on an average basis over the last 3 months in this case. So what I like to do is take these 25 stocks and write them down today. This is a Thursday. Write them down. Then tomorrow, I write down the 25 that are on here. Monday, Tuesday, Wednesday, I just keep doing that. And then after probably 5-6 market days, I go in and say, okay, which stocks are consistently up here every single day? And I take those 5 to 10, and those are my stocks that I trade. That's one way of doing it. Another great way of doing it is to join the community. Have our community. If you come over here to my chart and you look at this, you see that I have Mo's list right here. This is one of my watch lists. ROK, CDNS, STX, Ralph Lauren, SkyWest, CCL, Lululemon, and Abercrombie & Fitch. Those were all brought to me by the community. Those are all, stocks are going back and forth between community members all the time, including on our live streams that we do publicly, but also privately for only Patreon members. And I would have never looked at these. I made a ton of money on SkyWest, CCL, Lululemon, and Jets earlier this year. Zim is my stock. I trade Zim all the time. I love it. Jets is my stock. I love it. Trading it all the time. And if you come over here to the audience list, you can see these are from our live streams, and I add these when audience members make a great recommendation. We have Disney, Duolingo, Insulet. Don't know what it is. Doesn't matter. It's another great point. You don't need to know you don't need to know anything about the company. You're looking for the pattern. You can come in here and say, and this is something that I should have said earlier. You can come in here and go, all right, block all this out. Block all this out. I don't need to know any of this. It doesn't matter. It does not matter. None of the ticker symbols matter. The only thing that matters are the patterns. It's the only thing that matters. The pattern is the pattern. That's why you can use this trading stocks, crypto, Forex, commodities. If you want to go trade corn from Missouri or wherever the hell they grow corn, go ahead and trade that. Doesn't matter to me. A pattern is a pattern. That's all that matters in this case, okay? So if we come over here and we look at all of these stocks that are sent by the audience, going back to my point, it's a great place to find stocks. So between Yahoo Finance, joining the community and talking to people and getting stock ideas, it is a fantastic place to be. You will have no shortage of stocks in your portfolio when you're looking at charts. Now let's talk about some mistakes or downfalls that people make. They chase hype. That's a big one. People chase hype. They see that Tesla's big in the news. NVIDIA's big in the news. Even worse, if you go back to 2021, Workhorse is in the news. Rivian, all of these companies, there's so many companies that Peloton, $180 a share at one point. I think it's like $5 right now. It's supposed to be the greatest thing since sliced bread. It was going to replace every gym in the country. Nobody was going to work out anymore except for in their garage pedaling away on their bicycle, right? Doesn't work. Doesn't work. And that is the point behind this. Don't chase hype. Just because something is being hyped in the market doesn't mean that you need to enter it. Discipline in this game is going to help you a lot. I'll tell you a story real quick. I was in Las Vegas a few weeks ago, and I was with 11 other guys, and they're all standing around the craps table, right? And they walked away with so much money that night. I don't gamble, so from my understanding, you don't often win at craps or something like that. Everybody was rolling the dice and everybody was making a ton of money. I think our table walked away with $10,000, $15,000, and I walked away with none. And somebody said to me, "Aren't you like upset that you didn't jump in that game?" And I'm like, "No, I don't gamble. That's not my thing." The point of it is, don't have fear of missing out. That's what you need to develop when it comes to trading stocks. You need to say, great for that person. They're making a ton of money on Peloton. It's not one of my 5 stocks, not one of my 10 stocks that I watch on a regular basis. Therefore, I'm not going to trade it. Guys, there's so many stocks that people send me during live streams that I look at and go, this has banger potential. This is going to be awesome, but I'm not going to trade it because it's not one of mine. Even somebody as experienced as me that has done this well for this amount of time, is probably why I've done this well for this amount of time, is because I'm patient and I stick to my strategy. That's what you need to learn how to do. You also need to paper trade to start. What does that mean? You're trading with fake money. You can set up a paper trading account with a TD Ameritrade, a Charles Schwab, TradingView, Webull, Interactive Brokers, whatever platform you decide to use as your trading brokerage account. It's fake money, but you need to treat it like real money. If you treat it like fake money, it's not going to work for you, but you need to treat it like real money, execute trades, see how you're doing, because when you start to trade for real, when you start, let's say you put $1 into a stock, I'm telling you right now, if you lose 5 cents, it is going to turn your stomach, even though it's 5 cents. You would throw 5 cents in the street, and lose 5 cents in the street, and you wouldn't even notice, right? But it's different when you start losing it in a stock. You have to become comfortable with seeing your brokerage account go up and your brokerage account go down. Don't get too excited on the top side. Don't get too down on yourself on the downside. Now that you know the full basics of the swing trading course, the real question is, how consistently do you find winning trades and actually execute those trades with 100% confidence? Well, lucky for you, that's exactly what we cover in our full course video. It's a complete breakdown of how we trade stocks from start to finish, how we identify entry points and exit points, and build that watch list that actually works for you. If you're serious about growing your account and finally finding a process that works for you, then do not miss this video right here. Click it right here and take your trading to the next level.